Right now, there are more than 25,000 banks operating around the world, and the 10 biggest banks alone control trillions of dollars in assets. But banking didn't begin in skyscrapers or mobile apps.
It started on a simple wooden bench.
It's the 11th century in northern Italy. Cities like Pisa, Genoa, and Florence are booming with trade.
Merchants arrive carrying silk, spices, grain, and gold from across Europe and beyond.
But there's one major problem: too many currencies.
Merchants constantly had to exchange coins from different regions.
Transactions were slow, confusing, and easy to manipulate.
So money changers began operating in public squares using wooden benches.
That's where the word bank comes from.
But banking quickly became much more than exchanging coins.
Traveling merchants needed safer ways to move money. Carrying bags of gold across long distances was dangerous. Theft was common, and counterfeit coins were everywhere.
To solve this, lenders began offering credit.
And merchants developed systems that allowed payments between cities without physically moving money.
That idea changed everything. For the first time, money could move through trust, records, and networks, not just through coins in someone's pocket.
So how do banks work today?
At the core, the model is surprisingly simple. First, people deposit money into the bank. In return, the bank may pay a small amount of interest. Next, the bank lends part of that money to borrowers, often at much higher interest rates. The difference between what banks earn from loans and what they pay depositors is one of the main ways banks make money. But banking is bigger than profit. Banks help move money through the economy. They support home purchases, business expansion, education financing, agriculture, infrastructure, new companies and startups. Without banks transforming savings into loans, economic growth would slow dramatically. Banks also provide services like payments and transfers, debit and credit cards, currency exchange, online banking, investment and cash management. Modern economies depend on these systems every single day. And if you enjoy simple finance explanations like this, subscribe to the channel for more banking and financial education videos.
But banking also has a darker side.
Over time, some major financial institutions shifted away from traditional lending and began taking larger risks to increase short-term profit.
Then came the financial crisis of 2008.
For years, banks approved large numbers of risky mortgages, including loans to people who could not realistically afford repayment. As housing prices rose, many believed the market would continue growing forever. It didn't. When housing prices collapsed, millions lost their homes. Businesses shut down. Global stock markets fell. Unemployment surged. Entire economies entered recession. Governments stepped in with massive bailout programs to prevent the financial system from collapsing completely. The crisis damaged public trust in banks and triggered major debates about regulation, risk management, and accountability. In response, many countries introduced stricter banking rules and stronger financial oversight. But the debate continues today. How much risk should banks be allowed to take?
Today, traditional banks are no longer the only option. One alternative is the credit union.
Credit unions operate similarly to banks, but they are owned by their members rather than outside shareholders. Their focus is often community support rather than maximizing profits. Because of their structure, many credit unions avoided some of the extreme risks seen during the 2008 crisis. Another growing alternative is crowdfunding. Platforms like Kickstarter allow entrepreneurs, creators, and startups to raise money directly from the public. Instead of depending entirely on banks, people can support projects they believe in through smaller contributions. And then there's microfinance. Microloans provide small amounts of capital to individuals and small businesses, especially in developing countries, helping people who may not qualify for traditional bank loans. For many families, access to even a small loan can create opportunities for education, farming, trade, or entrepreneurship. Subscribe and join the community for more beginner-friendly banking and finance lessons made easy.
Banking affects almost every part of modern life.
It helps people save, borrow, invest, build businesses, and manage daily financial activity.
At its best, banking creates opportunity and supports economic growth.
But as history has shown, financial systems also need transparency, responsibility, and trust.
Understanding how banking works is one of the first steps toward making smarter financial decisions in your own life.
Thanks for watching, and I'll see you in the next lesson.